Good evening, ladies and gentlemen, and a very warm welcome to the show. Thank you so much for tuning into Smart 24 TV, where we say we drive your business. My name is Anthony, and I am your host. This is financial markets, and we get to analyze and look at the financial markets as they have run in the region throughout the day and within the country. Our main goal on this show is to see that we have more people getting to invest their money, their savings in the capital markets, in fixed incomes, in a couple of other assets that are available in the financial markets realm. And you can follow us on Twitter at Smart24TV now, and you can also follow us on YouTube. You can just Google Smart24TV Live on YouTube, and you'll be able to catch the show live every day at 9 p.m. And this is, of course, the number one show when it comes to financial markets analysis, giving you the latest information and with a touch of analytical data from the different stock exchanges. Well, starting off today, we have a lot of stories to be discussing ahead of the show. One of them being Airtel's dividend that they have issued, and the biggest shares they are going to NSSF, over 8 billion shillings that will be going to NSSF. In other news, for the Umeme company, Kenyan investors have been called to collect the dividends at Umeme. A list has been produced, a couple of investors who haven't fetched their dividends in the past couple of years since the company cross-listed on Nairobi Securities Exchange. We're going to see what are the challenges there and what could we do. We will also be looking at the treasury bond market, and in particular, a 350 billion shillings bond that was issued by the Central Bank of Uganda at an 18.5% coupon rate. Very, very great return. I think in the region, that is one of the highest returning bonds within the market. 18.5% is what we are talking about here. And definitely there's a lot more to actually discern when it comes to investing in the treasury bond market. We'll also be still continuing with our story on the Central Bank of Kenya Monetary Policy Committee that led to a 200 basis point increase in the central bank rate of Kenya, the CBR of Kenya. The ripple effects are already being felt within the economies. However, the Kenyan shilling has been quite substantially stronger than the usual, than we have seen in the recent past few hours here on the show. But first, let's get to look at the analysis for the day at the Africa stock exchanges, and starting off with the Uganda Securities Exchange. In Uganda, of course, now we have 19 companies that are listed, the latest being the Airtel Uganda company. And we're going to just look at how the performance was for today and have a look at what we would be expecting tomorrow. Now, Uganda Securities Exchange on the 13th of December, at least saw over at least 4 equities participating in trade, ending the day with 7 gainers and 2 losers. Centum Investments led the gainers with a 3.72% appreciation in price, closing off at a price of 215.55 Ugandan shillings per share. He was followed by Nation Media Group, who at least had a 3.12% appreciation as well in price. Jubilee Holdings Limited stock as well appreciated by 1.98%, and the Equity Bank appreciated by 1.01%. The 2 main losers were Umeme, which lost 2.87%, and Airtel Uganda losing 0.46%. Yes, the picture is very clear. All the gainers, the 7 gainers on the market were cross listings, and the 2 losers are domestic listings. That already gives you a picture of what is happening to our indices. We have 2 indices on the Uganda Stock Exchange, the All-Share Index and the Local Company Index. The All-Share Index this time round appreciated by 1.45 points up to 895.22 points. This index in particular tracks the aggregate performance of all the cross-listed and domestic stocks that are listed on the stock exchange here in Uganda. And due to the top gainers being 7 and the losers rather being 2, there's been an improvement in this particular index. That shows an improvement in the overall performance of the exchange. Proving this is the 1-week gain of now 0.08% on the all-share index and the 4-week gain of 0.05%. Yet an overall year-to-date loss of 26.17% is still lingering around the all-share index. The local company index, on the other hand, consequent of the loss of Airtel Uganda and the Wumeme stock, the local company index depreciated by 0.32%, down to at least 274.79 points, representing now a 1-week loss of 0.06% and a 4-week loss of 1.68%. Yes, and an overall year-to-date gain of 0.78%. Showing a picture that the local stocks have generally performed well this year so far, and yet on the shorter term they haven't performed so well. Let's look at Wumeme, for example, here. Wumeme lost 11.81 shillings yesterday, down to 400 Ugandan shillings per share. And this loss was as a result of a trading volume of 147,400 shares and a turnover of 59 million Ugandan shillings. The company, however, is still one of the most valuable companies, coming in the 7th position in ranking at a 650 billion Ugandan shillings market capitalization. This market capitalization represents at least 4.04% of the entire equity market on the Uganda Stock Exchange. Now, current performance of the stock shows at least in the 3 months or in the past 1 quarter, the company has appreciated by 0.25%, and in the last 6 months, it has drawn a loss of at least about 9.09%. However, in the last 1 year, the company has appreciated by 90.5%, yet an overall year-to-date performance of 45.5% appreciation has been realized at Wumeme. Now, in terms of trading, Wumeme is the 3rd most traded on stock on the Uganda Securities Exchange over the past 3 months. From the 12th of September to the 12th of December, the company has traded a total volume of 14 million shares, valued at 5.71 billion Ugandan shillings over the period. In terms of turnover, this makes the company the highest turnover, having the highest turnover within the period. Now, an average of 221,900 shares has been traded on every trading session that Wumeme has been able to trade on. A pretty interesting figure here. And when you look at the figures, really, Wumeme has been performing very excellently on the Uganda Stock Exchange. We're going to be later on looking at Wumeme's cross-listed shares as well on Nairobi Stock Exchange. Wumeme is the only company cross-listed from Uganda on any other stock exchange, and it got cross-listed in 2012. This is when it got cross-listed to the Nairobi Stock Exchange, ending the dominance of only the Kenyan stocks cross-listing on the other East African stock exchanges. However, the story we are going to be looking at there is the fact that since listing, there are a couple of investors that the company has listed that haven't fetched their dividends in the past now 10 years. We're going to be looking at that and what it means for the Kenyan investors there. It's quite unfortunate because in Africa and in the rest of the world, dividends are something people look up to, and you wouldn't expect people to not fetch their dividend, but it does happen. And in Uganda, our laws do not encompass maybe dividends that are not fetched. Where do we put that? Is it in the consolidated fund? Is it at Bank of Uganda? It's not like in Kenya where all there's a centralized system in which all the unfetched dividends, name it, are put in this consolidated fund sort of at the central bank. And this is where they can be reunited with their investors, respective investors. We don't have this year. I don't know if the Capital Markets Authority and the Parliament of Uganda could think through a policy or a law that could actually take care of this kind of incident, because it's happening currently as we speak. But before we go into deep into Umeme, Airtel Uganda, this is another stock that has been on the exchange for the shortest time so far. And let's just have a look at Airtel Uganda's current performance here, and have a look at the last couple of days since listing. Airtel Uganda got listed on the 7th, started the journey of listing on the 7th of November this year. And looking at some of the highlights here, it was a very great excitement that the company, the Ugandan Security Exchange, had actually seen the second telecommunications company list on the exchange. And a lot of people had so many expectations. But let's have a look at the few things that happened in the recent past as per Airtel's listing. Now, it's been 58 days so far since the company went public. But the Uganda Securities Exchange has had trouble by its illiquidity issues at the moment, with very limited trading volumes and a minimal price valuation appreciation for listed companies. And this lack of liquidity poses a big challenge for investors seeking to trade their shares, and in fact, making it very difficult to exit their positions at favorable prices for exit at all. Now, Airtel Uganda, one of the country's leading telecommunications providers, on its debut on the Uganda Securities Exchange on the 7th of November, raised at least 200 billion with 95% of the floated shares going to NSSF. Now, interestingly, this was as a result of an extension of the IPO that has never been seen, unprecedented, actually, indeed. We had this extension, and just on the eve of the deadline, on a Friday evening, NSSF announced that it will be buying 10% of Airtel at 199 billion Ugandan shillings. Interestingly, this was after the company subsidized their share, the price of a share from 100 shillings to 47 shillings for institutional investors. Now, in 57 days since listing, the company's share price has exhibited a mixed performance, reflecting the overall market dynamics. First of all, let's look at the total value. For example, so far in the last 58 days, 57 or 58 days, the company has traded 24 million Ugandan shillings. Just to put it in context, that's about 50 by 100 plot of land in Gayaza right now. And this has been exchanged in the last 58 days. While this figure may be insignificant, it represents a significant increase compared to the average daily trading volume of the Uganda Securities Exchange for other stocks. It's the average daily. For example, on a bad day, we could have 20 million shillings turnover on the whole market. But the company has at least traded 24 million, and it's quite commendable. The highest trading volume occurred on the 11th of December. That was this Monday at exactly 4.8 million shares that traded in one day. 4.8 million shillings, rather, that traded from the 48,900 shares that were traded on the 11th. This surge in activity could be attributed to the market participants taking advantage of the recent price valuation reduction from 100 shillings per share to the current ask price of 97 Ugandan shillings. Interestingly, a noticeable increase in the trading volume has also been observed in the past 11 days. A total of 14 million shillings, nearly half of the total trading value, has been exchanged in this short period. And this suggests that there's a growing interest amongst investors in the company's stock after the company announced its interim dividend. However, it's also important to note that there have been several days where there hasn't been any trading volumes on the company, and the highlights for this highlights, of course, the persistent illiquidity on the Uganda Stock Exchange. Please, just take a look at the stock. Right now, it's at 97 shillings, started at 100 shillings on the 7th of November. it's interesting. It's pretty interesting how things do change within a very short period of time on the exchange. Things do happen, and if at all goes well, NSSF will be bagging. Actually, yes, indeed, they will be bagging at least over 8 billion from Airtel's interim dividend. This follows an interim dividend that was actually announced currently, where we have NSSF being the second biggest earner after Bharti Airtel, which has the biggest stake in the company. Bharti Airtel is the bigger company that owns Airtel Uganda, which is the smaller company and domesticated here in Uganda. The payout will be the first return of the 199 billion shillings that the National Social Security Fund invested in Airtel's initial public offer on the 27th of October 2023. Airtel was listed on the 6th of November, becoming the second telecommunications company after MTN Uganda. Last week, Airtel Uganda announced an interim dividend payout of at least 76 billion, which will be an early return for the more than 4,600 investors. The payout comes 2 months after Airtel went public, promising shareholders a 95% dividend payout. Now, let's put this into perspective. When you talk about a dividend yield, a company having a dividend yield of 95% means that it will get its current price, and as a fraction of the initial price. So that means that if you have maybe initially 100 shillings and now you're at 97, so you have that fraction and then you have the dividend yield. Now, NSSF is the second largest shareholder after Bharti at Airtel, and this is the only institutional investor that invested in the company. Bharti Airtel will get the largest share of the dividend payout, which is about 67 billion for Bharti Airtel, and this is about 88.11% stake that they have in the company. The Indian-based parent company, which owns Airtel Africa, under which Airtel Uganda falls, owns a stake of at least about 40 billion shares within Airtel Uganda, of which 4.36 billion were taken up by the public. The board of directors, Airtel, at the meeting held on 24th of November 2023, resolved to declare and pay to the shareholders of the company an interim dividend for the year 2023 amounting to 76 billion at a rate of 1.9 shillings per share, according to a notice that was issued later last week. NSSF bought 4.2 billion shares in Airtel for at least about 199 billion on a deadline day, and a move which analysts said could have saved Airtel's initial public offer. The fund became the biggest investor in Airtel Uganda and obtained 10.55% stake in the 40 billion shares of the 40 billion shares and a 93% stake of the floated shares. Airtel Uganda will deduct the amount it will issue to its shareholders from its retained earnings as of September 30th, whose results are yet to be announced. The amount will be paid for all Airtel's books by 7th of November, the day the IPO went public. Out of the planned 800 billion shillings, Airtel Uganda was able to only raise 211.4 billion through the sale of shares between 29th of August and the 27th of October, which was just 54.45% of the 8 billion shares offered. Under subscription there was about 45%. And in its prospectus, Airtel also said it intended to issue at least about 500 billion in dividends for the year ended 31st December this year. Thus, the 76 billion is an interim payment with the final 2023 dividend payout expected sooner than later. That's a story coming in from Airtel Uganda, and we keep our eyes on Airtel Uganda and see how the stock closes. Yesterday it closed at 96 shillings, and we're yet to see how the stock is going to perform lately, how we are going to be able to play out with this kind of a back and forth from our different other stakeholders, like the big institutional investors. There's been always a query of institutional investors being a detriment to the investments in the stock market, because their dominance means that they have most of the control, they have most of the shares within the company, they have most of the stake. And this could be a good and bad thing. Good because the company will be able to raise more money for its IPO, because institutional investors cannot compete with individual investors when it comes to investing in a company, especially a company that is seeking capital. So the company will run away with the capital. But then later on, the liquidity will be slow because these institutional investors hold for the long term. They rarely sell. And so you're going to have much more illiquidity. That's the disadvantage. But what do you think? You can share with us on Twitter, on at Smart24TV. The hashtag is Financial Markets. Share with us what you think is the impact of the dominance of institutional investors on our listed companies. Share with us at Smart24TV now. You can also comment in the comment section on our YouTube channel. That's at Smart24TV now. Definitely, we'll be very happy to get that feedback. We're going to take a quick breather. When we return, we go to Nairobi and have a look at the performance in Nairobi. Very beautiful performance there. From Nairobi, we'll be looking at also the investors that did not fetch their dividends in the past 10 years. Who does that? I mean, come on, Kenyan investors. We'll return shortly after this quick break. Stay with us.
Smart 24, driving business.
Ugandans come to Ginger City every weekend. And December 16th, 2023 is Uganda's end-of-year party as Smart FM hosts the Smart Swag Fest Season 2. Don't miss performances from Uganda's top DJs, MCs and artists like the king herself, City Baby, and her full band, Fig for Maker, UG Boys, Kesmon Switch, King Zamba, Waymaker Official, Voice Nancy, Zach Tom Rizla, Lance Soldier, and many more local artists. Let's meet at the Chairman's Back, next to Ginger Showgrounds. Get your early bird tickets now at 15K and at the gate 20K. Gets open from 10 a.m. till late. The Smart Swag Fest is organized by 89 Smart FM and Hot Shots. Powered by Smart 24 TV, Sisan Suits, NBS Cordeo, GZ Mechatronics, Ginger Hippos, Kampala University, Albeit Electronics and Solar Center, TMU Tubing and Rafting, Banshee Uganda, Quad Biking Ginger, Cable Giants, Stardom Visuals and Audio, Bidco, and Club.
Tastefully different. Not for sale to persons under 18.
This is Jordan. When it comes to classwork, Jordan is magic. Jordan shines. Jordan makes his peers better. Jordan is a true leader. White Star Magic Family. Be a leader. Be magic.
Luxury redefined at Sisan Hotel as you indulge in the splendor of elegant living fit for the royalty that you are. Step into comfort, pampering and blissful customer-centric service as you select from our range of comfy exquisite living quarters furnished to meet with your royal preference. Surrounded by scenic beauty, our tropical setting allows you to escape the glamorous ordeal of city life. Our ambient green gardens will guide you to a place of revitalizing rest. The 3-star restaurant caters to your palate, serving your choice menu ranging from exotic cuisines to local delicacies. Our chefs will serve you full course meals for a truly out-of-this-world culinary experience. Our fully stocked bar to whet your throat, from renowned global brand whisks, brandies, gins, beers and wines to our locally celebrated beverages, you will not lack for any brewage. It's an all-new experience in the East at Sisan Hotel, so visit today at Plot 15 to 19 Spire Road, Ginger, or contact us on +256 751 719 960 and +256 785 354 614 for reservations. Sisan Hotels, luxury redefined.
Smart 24, driving business.
Welcome back to Smart 24 TV Financial Markets. My name is Anthony, and thank you so much for staying tuned with us here where we drive your business. With, of course, a couple of other people here trying to get you up to speed with what is happening in the world of financial markets. Remember to follow us on Twitter and get to watch us live on YouTube. We'll be very glad to get feedback through the comment section there and be able to answer some of your queries and questions that you might be having concerning the market conditions. Well, we are looking at still the East African markets, and now we move our eyes to the Nairobi Securities Exchange. Looking at the Nairobi Securities Exchange currently at the 66 listings that we have on the exchange. At the end of the second day of trading, Tuesday, at least the company had 40 listed equities participating in trade, ending the day with 13 gainers and 18 losers. British American Tobacco Uganda, Kenya rather, led the gainers with a gain of 4.71%. And this was at a share price closing of at 422.50 Kenyan shillings, followed by Home Africa. And Home Africa added at least about 3.7%. Then the Real Estate Income Trust that is Ilam Fahari, had about 2.52% appreciation in price. Scan Group added about 2.44% on their value. On the losing side, Sanlam Kenya came out last with an end-of-day price depreciation of at least about 6.3% at a close of 6.84 Kenyan shillings per share. And this was followed strictly by TransCentury at 5.66% and Capacity Investments at a 4.87%, whereas Williamson T Kenya is depreciated by 4.78%. Safaricom recorded the highest volume, close to 1.77 million shares that were traded, followed by Ken General Group, which had about 900,000 shares that were traded. Now in Kenya so far, at least a total value of 3.5 million shares was traded, corresponding to a market value of 37.6 million Kenyan shillings, significantly impacting the volumes by a decline of 42% and 64% decline in the turnovers compared with the previous trading day. Now in Kenya still, we have a couple of stories coming up, and we'll start with the one with the umeme dividends. Kenyan investors have been listed to collect dividends from Uganda's umeme. Now, tens of Kenyan investors have been listed in a notice by Uganda Electricity Company, umeme, as having failed to collect their dividends, running into millions of shillings from the company. Umeme, which is cross-listed in Nairobi and domestically listed here on the Uganda Securities Exchange, has cumulatively paid out a total of at least about 14.6 billion Kenyan shillings. That's approximately 359.8 billion Ugandan shillings and about 95.4 million US dollars in dividends since 2018, making it one of the top dividend-paying firms in the regional equities. The company listed at least 585 shareholders. Come on, Kenyans, 585 who have pending dividend collections but did not disclose the share of these uncollected payouts. The dividends or their nominated beneficiaries, and I quote from the public notice, are requested to contact the share registrar, custody and share registrar of Uganda Limited to update their pay records according to the company notice. Kenyan individual and institutional investors have increasingly eyed opportunities in the Ugandan market, looking for returns from firms such as umeme and listed telecoms such as MTN and Airtel, which have a stable dividend policy. Umeme has been cross-listed on the Nairobi Securities Exchange since December 2012, becoming the first to break the trend where only Kenyan firms were cross-listed in other East African markets. It has since been joined by the Rwandan Bank of Kigali, which joined the Nairobi Securities Exchange later on in November 2018. Uganda, unlike Kenya, does not have a centralized system, like I mentioned earlier, where unclaimed financial assets such as dividends can be deposited for reunification with the right owners and beneficiaries. The country's laws allow for banks to deposit unclaimed balances, that is with the Bank of Uganda, but there is no provision for dividends, although the government is mulling the creation of an unclaimed assets authority. Now, this leaves a lot of questions, and to the respective companies, it leaves them to trace and raise their own owners of the dividends, who then have to lodge claims with their share registrars for such firms. In Kenya, for example, the Unclaimed Financial Assets Authority has received remittances worth about 53.5 billion Kenyan shillings from institutions to date, paying at least 27,107 claimants about 1.93 billion Kenyan shillings. The majority of the funds are held in stocks, while other sizable amounts are held in insurers, banks, pension schemes, law firms, mobile phones, money wallets, and SACCOs, among others. Dividends and shares are among the more unclaimed assets, according to Kenya, according to the Unclaimed Financial Assets Authority of Kenya, due to owners failing to disclose their next of kins or beneficiary details when purchasing the units. The issuance of wrong mailing addresses has also contributed, according to the authority, to the build-up of unclaimed dividends. A baseline surveyed commissioned in 2018 estimated that at least over about 241 billion Kenyan shillings in unclaimed financial assets was still unreported by the Unclaimed Financial Assets Authority by the public agencies and private firms. The report further at least showed that approximately 477,112 public and private entities hold at least these assets in their books unclaimed. A call to the Capital Markets Authority and the Parliament of Uganda. This is a very critical issue, and I think it needs to be picked up very, very seriously. And one of the things that really comes to with financial investments like these is the next of kins. Usually when you're filling, for example, for a bank account or something, you always have those, not even one, not even two, sometimes three next of kins, just for them to be sure they have someone to refer to in case they cannot reach you. Now, I don't know where this lies when it comes to investing in companies like these that are cross-listed, that are listed in the Uganda Stock Exchange, Nairobi Stock Exchange. It is something very critical and needs to be observed. Now, you have all these 500 people that haven't fetched their dividends in the last 10 years. And the amounts are hefty. So there needs to be some sort of arrangement, and I hope this will be taken up by CMA and the policymakers in Parliament to ensure that the Unclaimed Financial Assets Authority, the one that we have in Kenya, can also be created in Uganda in order to handle such cases. Otherwise, lots of monies are going to go unnoticed somewhere where we might never know, just in case. You know, things do happen. People pass away, people lose accounts, and they lose lots of money out of such kinds of acts. And so there's a serious demand on the CMA and other policymakers to come up with this unclaimed assets authority, or some sort of policy that can cater for those unclaimed assets. Furthermore, in Kenya, there's a lot still to be looked at here. The Kenyan shilling has been picking up against the US dollar from the free fall that we've been seeing the Kenyan shillings take currently. And there's been a rate of constant weakening against the US dollar to its lowest pace since the beginning of the year, reflecting the reduced demand and improved supply of the dollar in the economy. The Central Bank of Kenya data shows that the shilling has shed an average of 3 cents to the dollar since the beginning of December, compared to an average loss of 12 cents in a day in November and 13 cents in October. Pretty much better improvements here. The stability has also filtered through to the retail market, where the dollar selling rate has held within about 150 to 160 units of the local currency since mid-August. Now we are seeing a muted demand of dollars from businesses as they ease activities towards the holiday season. On the supply side, there are sufficient flows where we have seen improved interbank market efficiency, according to current commercial bank lender. Now, a sample done on Monday on the rolling exchange rates in 4 Tier 1 lenders, that is Equity Group, NCBA, I&M Bank, as well as Stanbic, showed quotes between about 157.85 Kenyan shillings and 158 Kenyan shillings on the selling side, and a buying range of between about 152.75 and 153 Kenyan shillings on the buying side. On the sell side, the margin between what the banks are quoting and the central bank's official rate has fallen to 4.56 units, down from 6.45 units. Banks had, at the beginning of the year, struggled for the dollar liquidity due to a stagnated interbank market, which also made it hard for the economy to discover the true value of the shilling. Lenders were also afraid of at least falling fraud of strict central bank Kenya rules on the daily rate movement and the trading dollars among themselves outside the official rates. Progressive talks between the Central Bank of Kenya and other banks from March have seen a continued revival of the interbank rate dollar market in recent months, allowing for the narrowing of the spread between the rates on offer in the banking hall and the central bank's official rate. Central Bank Kenya Governor Mr. Kamau Thuge has also been calling into question the management of the shilling by his predecessor Patrick Njoroge, saying that the regulator's interventions had the effect of keeping the shilling artificially strong at a time when it should have been depreciating in line with the prevailing economic conditions within the country. That is something that we'll be following up with and having a look at what the Central Bank of Kenya there is going to be doing in relation to the Kenyan shilling's weakening. But besides that, let's look at the Treasury bond market. This is one of the markets where fund managers find a lot of peace because one, the markets have a lot of safety, much more safety than any other assets within the financial markets. And two, the returns are good, pretty good. Compared to most of the other returns within the sector, there's been a lot of much higher yields, much higher interests within the Treasury bond market. Now let's talk about the Uganda Treasury bond here that was issued recently. There's been a bond under the symbol, the ticker symbol, or the identification number, which is UG12L 1408420. This is a Treasury bond that is on offer. It was auctioned and issued at a coupon rate of 18.5%. Now the bank